Hello and welcome back for another edition of London Direct. The oil slump seems to have eased for the moment, but the death of the Saudi king has injected some volatility back into the market. So where do we go from here? Well, I've been to the offices of Sucden Financial to find out. So let's start with the situation with Saudi Arabia. Obviously, the king's passed away. Do you think that's going to alter any policy from the Saudis in terms of what we've seen so far?
The reaction in the markets was a bit of uncertainty at the moment. So as that news broke, we did see the oil prices rally quite a bit. We was up about $1.50 earlier on this morning. But the reaction from the Saudis is that policy should not be changing. So we're not expecting the market to shift too much away right now just on these recent events. But what we will like to see is whether the OPEC policy overall is going to change. But, not just yet.
Yeah. Is Al Naimi's the key man, isn't he? He's been oil minister for 15 years.
He's the key man, but this is the family that, who's passed away. Now, since the Saudis did comment, the markets have drifted back down, so we're virtually unchanged from where we were when the news broke. So not too much focus on that event so far regarding oil prices right now.
Do you think we've seen the bottom for Brent? Because when we're falling, it's we get all these wild predictions, but it seems as Brent moved towards that $40 mark, that seemed to be some sort of resistance.
Well, what's happening right now is a completely different situation from when we saw oil at $140, should I say? Then it was a different story. We had rapid growth in India, in China, and also we had uncertainty in the Middle East, geopolitical instability. So they are all factors weighing on the market. Plus, OPEC had a little bit more control over production. Right now, different story. We're seeing record production coming out of the US. It's the most since about 30 years ago. So what we're seeing now, extensive production coming from the US. OPEC production is pretty much the same. Since we had their meeting in November and there was no cuts, the oil prices continue to go lower. We're not seeing that great demand from Asia. We've had the ECB decision where you would have thought the market would have shifted higher, but that problem is centralised in Europe. And what we're seeing now against the US dollar is continuing to strengthen. So that oil price is still pretty low. So the fundamentals are stacked against a price rise. So we are having difficulty trying to move above $50 at the moment. Floors is a question, how much lower? If the Saudis don't budge, they keep production as it is, then we might keep going lower. But you've got to look at the investment as well. When we look at the production in the US, and like I say, their production's up to nearly 10 million barrels per day. A lot of that coming from shale. Yeah. Now, the price that the US was looking to make it profitable against that oil is probably $60-70. So we're down under $50. So that oil is not profitable right now. So what you may start seeing, or what you are seeing, is investment is dwindling. The number of rigs is declining. So they're making big cuts in the number of rigs that are drilling. They're slashing costs, they're slashing jobs. So what we see as that comes down and there's less production, then we might see it start to go up. Yeah. But there's a bit of a war at the moment between OPEC, US, Russia.
Do you think OPEC's losing some of its market share essentially, because you see Russia talking to China, you see Barack Obama allowing the export of some US shale oil, and this is all happening outside of OPEC's powers.
Oh yeah, very much so. Yeah, they're not got the same powers I had in the 70s, 80s, 90s. No, that's definitely, particularly in the US, as we say, with his extra production and Obama allowing them to export, and also the extra production coming in from Canada. The Russians are producing more because of the sanctions on them. So then the Chinese are going to the Russians, and a lot of oil's going over that way. So yes, definitely, I think OPEC are in a worse situation than they was before in their ability to control oil prices.
Yeah, can you explain something to me? You've been doing this. How long have you been working in oil for?
Well, I've been Sucden for 23 years.
So you're well placed to answer this. I saw Eni earlier this week. They were saying that the way the oil price is going, that the rebound is could be as high as $200. And I've heard this said before, that the lower the price goes, the stronger the rebound. Why is that?
Well, yeah, they're just looking at price charts and looking at the technical reasons on a particular market. So they'll view how it's gone down, and they'll look at it as like a retracement going back above the current level. I think that's scaremongering. I don't think we're going to be seeing $200 for a long time. I mean, we'll be lucky to get above $60 on the current fundamental situation. But then, like we say, you keep going back to OPEC, and they're budgeting on oil being higher than it is now. I think we've just seen Iran sort of bring down their price to $40 to arrange their budget. Iraq's going to be similar. Saudi's a little bit higher. So they do need the oil price up to make their budgets work, because the oil producing countries will swing into deficit over the next year or so. So
one last question. Where do you think we will be trading at the end of this year? I went to another broker a couple of weeks ago, and he basically refused to give me an answer. He just said higher.
He said higher?
Yeah. I could say that. But what sort of range do you think we'll be in at the end of the year?
Well, the fundamentals are stacked against us. So if you looked at where it's going, it still looks like it's going to be lower. Now, right now, just under $50 is proving a bit of a resistance point, because the funds have been very short. But, like I say, if this investment starts to dwindle away and the production slows, then obviously less production, and the demand is definitely coming back in the US, we should start to see prices go higher. Now, as those funds start unwinding and you get this bigger demand coming back in, then above 50, breaks through $50, and you've got to target $60.
Well, thanks to Robert for his analysis of the situation. Stay tuned to Dukes Copy TV for more interviews, but for the moment, goodbye.